Hello everybody and welcome to the European Session Brief. We're on Monday the 1st of May 2023. New trading month. We're almost at 8:30 in the morning here in Europe. That means we're just over half an hour away from the European Open, and it's been quite an interesting day for the futures trading so far. So some pretty sizable losses earlier on in the session. The DAX in particular here, you can see moving all the way down to a test at 15,735, and then we've seen an enormous bounce of more than 200 points back to the upside, where we're now pushing and set to open at new yearly highs. So yeah, pretty interesting day so far, and for Monday, not the kind of moves that we tend to expect. Could this be setting the scene for a big week ahead? I just posted a quick note inside the trading chat, just to outline the monster week that we've got ahead. Of course, Fed is the one that stands out on the calendar, but don't forget we've got the ECB, we've got the RBA, who might be a little bit quieter compared to the other two in fairness. They're set to stay on hold, but the Fed set to hike by 25 basis points, then be done for the year. No rate cuts for the year. Don't forget as well, ECB are set for a 25 basis points hike. We've got NFPs to look forward to on Friday, but before then we've got job openings that provided some market volatility on the previous reading. We've got some PMIs as well this week. It's a super busy calendar. ECB bank lending survey is also to be watched. We've got another 162 S&P 500 firms reporting earnings, with Apple the standout release. So yeah, an interesting calendar. But what is also interesting is that market pricing at this point of implied volatility over this week remains relatively subdued. Now I'm just questioning if the market might have got that wrong, given we've seen a bit of volatility on this DAX already this morning. But it seems that bets at this stage aren't on broad cross asset volatility. From here then, could that give the DAX the boost it needs really to just see some steady continued breaks? I'm saying steady, yes, we've had some volatility today, but I mean the breakout, could it be a case of getting a daily close above the yearly highs, and that's all we needed to then get into the 16,090, and then from there we've got cracks at new all-time highs on the DAX before too long. UK equities as well, you've seen that bounce as well on the FTSE. FTSE has been putting in several lower lows last week, as you can see on the daily, pretty much every single daily bar, the low being below the previous one. Even today we've seen that low below, but we did find a green day on Friday, so then that's just held the market up somewhat as we trade back above 78.45. The NASDAQ is also going to be looking at Apple's numbers this week. Obviously we cover the US markets later on, but just a quick mention. It is looking to break out its consolidation phase to the upside, and while breakouts have limited success, the upside target of 13,800 remains the area that we'll be looking at from here on the NASDAQ. The S&P is also having another crack at its own yearly highs. That's 4160, 4165. We saw a series of failed breaks in February. Are we different this time? A lot of the heavy lifting in the market at the minute being done by Apple and Microsoft, and we haven't seen that finished just yet, and a firm break of 4160, and many will be chasing the index to that 4300 number. And of course Apple's numbers this week from the earnings release could have a major play in that. The yen saw quite a lot of movements on Friday. The dollar yen as well, breaking, I think it was 200-point move to the upside. That was after quite a dovish Bank of Japan. Can the buyers push it a little bit further? We've got about I think it's 137.60, 137.70 area on the dollar yen. The real action for the yen comes in June, but for now I think the yen is the weakest link, let's say. Gold has continued to consolidate. It's that 2000 level, just haven't been able to see a break higher or real strong break low. There's been quite a lot of mean reversion around there in the past couple of weeks now. And of course that leads me on to our marquee events of the week. The FOMC being the highlight. 25 basis points hike seems a done deal. Could this mark a temporary end to the Fed's tightening hiking cycle? Most economists are calling for a 25 basis points hike. The market is saying there's an 85% chance of this outcome. So pretty much a done deal. Inflation is still elevated. The risks are skewed to a hawkish hike. With the press conference as well, being Powell delivering a hawkish message to markets. US NFPs, that's on Friday. We'll cover that more close to the time. ECB, like I mentioned, 25 basis points hike is not just fully priced. There's a small premium as well for 50 basis points. The market is long of euros and expected to remain hawkish. So just consider that when looking at this euro chart, especially if we see a slightly less hawkish than expected message. With the market being long euros, it could be a pain trade to the downside, especially breaking out of this technical channel that we've been trading in now. And you can see here we've just had a few attempts at breaking below there, and once again today it looks like got CPI numbers out of the EU. That could heavily shape pricing for the ECB meeting as well. So I've just mentioned the ECB, but the market consensus is that we see headline core CPI at 7%, core CPI at 5.6%. So it's a headline CPI at 7, core CPI at 5.6. So the euro, like I just mentioned, bit of a range trade at the moment, but still tracking with that channel to the upside. JOLTS job openings we've mentioned, ISM manufacturing report, ISM services, April employment report. Equities to watch this week, we've got out of the ASX, we've got NAB, we've got ANZ out of the UK, EU, we've got HSBC, BP, Lloyds, Shell, Volkswagen, so some big names there. China, Hong Kong, we've got HSBC, so a lot of really big banks this week. Away from your big guys out of the US, and then in the US we've got Pfizer, Apple. There's an implied move of 3.7% on Apple this week, and also Moderna. So yeah, setting the scene there for an interesting week. Cable will be looking to hold on to those gains from Friday, closed above new yearly highs. Now we'll be looking for some support at what was key resistance at 125.25, so it'll be a case of holding above here now and then using that as a springboard really to carry on this move into the 126.45 area, which is these highs from June of last year. So yeah, that's basically where we're at, everybody. I'll speak to you inside the chat room if there's any further updates on markets. Until next time, all the best for your trading, and bye for now.